Hey everyone, it's Michael Valtos here from Orderflows.com, and this is today's Orderflows trade analysis for Tuesday, February 14, 2017. And it was Valentine's Day. I wasn't able to sit in front of the screen most of the day. Then it didn't really matter because my connection went down late in the day and I lost some of my data. But there were some interesting things that I want to talk about in the order flow. But before I get started, go through the brief disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. The three tools, actually it's four, used in this presentation. It's the Orderflows Trader software, which is the footprint chart, the Valtos Flip, the Valtos U-turn, and the Valtos Transition. These three indicators are order flow based indicators to highlight things in the order flow. So if you're looking at an Orderflows Trader's chart, you can concentrate on what's happening in the market without having to make, the decisions. Each one indicates something different in the order flow. It just helps make order flow trading easier for you. Okay, so this is a euro currency. This is a 1 minute chart, and I just want to point out something. Order flow oftentimes is about reading patterns in the market. Whether it's volume based or whether it's delta based. There are certain patterns that repeat themselves. I mean, they're not going to be exactly 100% the same every time, but you're looking for the sort of the same framework. And this was a perfect example this morning. This was then the euro currency 1 minute chart. And just after 12 o'clock, you can see the market was it was working its way down, right? It was working its way down. Gets down in here, just off the low. The low is 105.71. We came down to 72, so about a tick off the low. But as you see it coming down here, in here it's got some smallish deltas. Then you get this last big push, minus 92 delta, minus 45, then 12 right here. You got the bar turning up, and the next bar is positive delta of 22, positive 42. This 5-bar structure, so to speak, is a very, I'll say powerful, but it's usually a strong signal. What you have is, you're coming down, delta is picking up here, it's very strong, gets weaker, gets, kind of neutral here right in the middle, then it starts growing on the way back up. So, it's strong, less strong, neutral, strong, and stronger. I don't know how else to describe it, but if you're looking at these delta candles, it really shows out there. But if you just say you don't have these candles, if you're just reading the delta like this, you can see it, right? I mean, a lot of these things become second nature to you when you're familiar with order flow and you know what to look for. I mean, a lot of people come out with these footprint charts, but they don't tell you how to read it or how to apply it in your market. They just sort of leave it out there for you to figure out on your own. That's why I create these videos so you can watch. So maybe you're using a order flow chart from another company, whether it's Gomi, that you got from Big Mike's, or it's futures.io now, but or if you have another version of the footprint chart, or even if you're on Sierra charts, you could get all this information as well. But you got to learn to look for these patterns. I mean, it's not going to always be the same. Minus 92, it could be minus 120, it could be then minus 60 and positive 15, and 67 and 120, but this is what you're looking for, something like this, where it's getting weaker on the way down, getting stronger on the way up. And you could have been looking to be buying it in here somewhere around this 76 area, 77 area. We just sort of go sideways here before we start, moving up here. I mean, I don't even know where we got up to, but, it could have got something out of this trade. My quotes went down right around just after 1 o'clock. Time to go down about 1:30 here. So all my charts end at that time. But I'm going to show you some other things that I thought was interesting today. just really quick, this is the delta surge, which you could download from the website for free. It's a free indicator, okay, and it reads the delta of the order flow. And again, you could download it for free on my website. Just go in there, sign up. But if you do download it, just make sure you restart your NinjaTrader after you install it. Don't send me an email saying, hey, here's my machine ID. You got to restart NinjaTrader. But anyway, this is a 4-range chart, and I bring this up because some guy downloaded this and he said, oh, you know what, it's the shittiest indicator ever. I don't know. Some people are just so mean. And he said, I ran it on 4-range charts and every trade was wrong. If you're trading a 4-range chart on crude, it's going to be very, very fast. Usually, the people that complain the most are, I hate to say it, I don't like saying nasty things about people, but generally the people that are unhappy with this is, people that are lousy traders. I don't like to say it, but I think that's true because, people don't give things a chance sometimes. And they'll say, oh, I ran it on this chart today and it was just pure shit. So ever since then, I've been putting up 4-range charts on crude, on E-minis, and a few other contracts. And I always look at it and I really don't understand what people think. Again, you're trading a 4-range chart. You're going to be very, very quick because it can move super fast on a 4-range chart. But again, this is a move, from 50 up to, I'll say up to 70, but up to 60. Then you get a sell here, it comes off, get a buy here. If you're trading a 4-range chart and you're not automated somehow, you get a signal here. By the time you sell it, it's down here so fast. And the time you get a signal to buy, it's back down. You buy it up here, then boom, you come back down again. Have some sort of concept of what type of chart you're trading, and take things in context, right? If you just had a buy down here, and then you get another buy up here, well, you should already be long. You shouldn't be thinking, oh, I missed this buy, I should be getting it up here. Well, you had all this other chance to get in there, But anyway, that's my little bit of a rant on that chart. Take a look at something else. I'll go over some of the indicators real quick. I don't think it was that good. The 100-tick chart today wasn't very pretty. Again, my internet went out. That's why I got no charts there. That's why my charts end at a certain time. It's kind of frustrating. Anyway, that's it. So 8:30, you got a little bit of a move here. Not much, before it sort of worked its way down. Again, another little move here. Not much before it worked its way down. Got a sell here. Probably would have stopped you out. This buy probably would have stopped you out. These buys would have stopped you out. The sell, nothing. Maybe close to stopping you out. Maybe break even. The sell didn't work. This one you could have got something out of. This one maybe not. Probably would have come back up there and stopped you out. Would have been nice if the signal wasn't there and you would have just stayed long on that move up there. Here, I don't like these rounding patterns like that. That one didn't work. That one's a little bit further up. It's just unfortunate that you got this buy here, then you got to sell here, and then it makes the move. But again, you can see how my system went down at that point. Yeah, I'm making this video even though the indicators didn't necessarily perform that well, but I do want you guys to see this, just so you don't think that, oh, I'm only showing you charts on days that everything performed well. This is the mini Dow. This is a 5-range chart. Now this is the flip. Its settings are 5 and 25. It's going back to 8:30 is in here. Okay, so you got these sells, didn't work out. You got this sell, comes right back with the buy. Again, this is pre-cash. I prefer to, even though this trade worked, I'm not really talking about it because I prefer mini Dow once the cash opens, not right ahead of there. This one, it started working. This is if you're into candlesticks, this is a very bullish candlestick, this hammer here. You got another one here that didn't really work out. This one did, this one didn't, as far as hammers. Where else? So then you got this one nice buy here. No sell signals at all. Up to there. I'll talk about the order flow charts in a second. Just looking for something else here. Where's my? This is the 987 tick charts in the euro currency. Again, wasn't very much. It's kind of after 10 o'clock, it really went pretty quiet. This buy didn't work. You had to buy down here, which was in the money for the most part, but again, it's not much of a move that day, Tuesday in the euro currency. What is this one? I haven't even looked at this one. This is the everything chart. 9 o'clock, euro currency was all over the place. Okay, the hash. This is the U-turn. So it's giving you some of these turning points here. This one, not really. This one, yeah. This one then comes up here again. Support there. Here it's just going sideways. These are the flips. It's got this area here. This is the hammer sign again. Another hammer. This is the transition. This is a hammer. It's a nice signal, the U-turn, when it's on a hammer. Here. So that's it for that euro currency chart. Yeah, this one's the crude oil. I can make sure I change my charts this week. It's almost the roll period. 987 tick chart in crude. Transition settings of 3, 100, 400. The sell didn't work. This buy a little bit. The market wasn't that much movement this morning. Buy here didn't work out. A sell, it's just sideways. This buy didn't really work out. Then this buy, worked out, but it was very quiet, very quiet. It was kind of a quiet morning. I know, after. I'll say I know. What I mean is, I know there was other movements in these markets after my charts went down, but I'm just recording this, after the market closed. Again, I was running around doing errands today, but so I wasn't able to monitor the market. I'm doing this. This is just sort of a post-game analysis. Okay, so bonds. Bonds are interesting. It was very quiet in the morning. Coming into the U.S. Open, very tight range. I think he had like 151.17 down to 151.02. So about a 15 tick range, so pretty quiet. And we had touched our low again at just after 7:30. Traded up towards the high. You got these two bars here, same height, the same level. Both got bearish ratios, but again, very tight range. I wouldn't be looking to take anything. And then we started coming in 9 o'clock. That's when things picked up today. And we went into the lows, and we got through the lows very fast, low, and even down here we got down to 150.19. Not a ratio. It's a green bar though. We did bounce back up, and we kept going down. Here at 907 you have a divergence. Don't really go anywhere. Come in, make a new low, get another divergence. 936, make another low, another divergence. Now, the last couple of days I've been talking about, in the S&Ps when you've been trending, and I'm going to talk about the S&Ps also later, but, when you're trending, looking for new lows, with divergences. The thing I don't like about this, you can do it, here, but what I don't like is, one, you made all these lows here with no divergences. Then you get this divergence here, and then you make some more lows. I would expect to see a few more divergences in here. It's just powering through the lows. I mean, it's nice that you get this one here, this one here, this one here. If we're going to come back in, yeah, I'm going to look for us to take out the low, but how much lower can we go? I mean, we've already sold off, quite a bit, right? We went from, before the low was, before 9 o'clock, the low is, 150, 102. We sold off, literally over a point, okay? And are we still going to keep going lower? We got down to 149.29 here. And what's interesting, when you got down to this area, look at this volume, 3,000, 2,000. There was some very heavy volume here. You don't see this volume. You could see it just even on the volume number, 14,000 traded there. Where do you have that anywhere back here? You don't. So just looking at these numbers, you don't have anything like that in here. There it is. 3,000, 2,800. So there's very strong trading going on here volume wise, and even in the next bar here, you got 1,400, 2,000, 1,700. So there is some support down here. So that's a sign that, hey, well, maybe we've hit this low, and we could maybe hopefully rally off it. So what I'd be watching now over these next few bars, is some signs in the delta, some strong deltas. And it just kind of goes sideways in here. This bar put in a lot of volume, 21,000. It had a delta of just 500. Then you get small delta, 100, 100. 400 is not big. 400, these two kind of cancel. Then here you get into 1,200. It comes right back with minus 1,100. But what's interesting is what you can read into this, even though it's got a negative delta of minus 1,100. Look at this, why is it minus 1,100? The bar is green, so the market turned up. There was a lot of support in this bar, 1,500, 1,400. And then, positive 600 here, 1,100, 1,100, 1,500, as the market, reaches up to this point, and then you see the selling come back in again. But, really when this bar was, this bar here early was quite telling. You'll be looking for some signs. Then when you see this bar here, minus 1,100, okay, and the bar turns up, I'd be really looking for it to go higher. And, and it did. I mean, look at this over the next half hour. It rallied from basically 10, 150, 10, all the way up to, almost, 150, 25, 26, 27. So that was a nice, move. And there was a couple things in here that was quite telling. This was quite telling in here. This selling imbalance and this volume, this 1570 and this 1410, as well as this volume down here right off the low, this 3,000 and 2,800 and this 3,400. Okay, so this is the E-mini 3-range chart, and right ahead of the cash, we saw some selling come in. We got this stack selling imbalance. You got some nice negative deltas here, 500, 2,100, 2,000. A little bit earlier at 8 o'clock, you did have this imbalance, but again, and look how quiet the market is. Over the next 10 minutes, the market did nothing. We're still trading inside that imbalance, and you're coming up on 8:30, you're still sort of trading in there. Again, it's not the strongest sign. Again, I wouldn't be looking to take any trade like this right ahead of the cash open. If I did, I'd be looking for it to happen over the next 10 minutes, not over how many bars. I'd really be looking for a move to happen, but you tend not to get these nice moves right when you're trading right ahead of the cash open. Markets will sort of quiet down going into the cash open, then things will pick up again. In this case, they picked up to the downside. So even though you have this imbalance here, it's nice, but again, is it tradable? Probably not. What I think is more telling, and this is something that I've highlighted many times, is when you have these what I call opposing imbalances. Here you have a stack buying imbalance, and then within that 5-bar range, right? This is 1, 2, 3, 4. You're in the 4th bar. You have a stack selling imbalance. So you have an imbalance in the opposite direction. Usually, this is a very high percentage trade. Okay, so you go with this direction, and what does the market do? It comes off. It makes a new low. You got another imbalance. It's overlapping this time. It's right in that area, and you just you rally, unfortunately. Honestly, I would normally expect it to sell off a bit more, but in this case, it didn't. It was, I'll see what the word was. It was quite interesting morning, right around this 8:30 time. This is 8:30, 8:31, 8:32 in here, 8:33. And, you come up here, right? You got up to this area. This is the price rejector, both, this is the price rejector here, but then you got it again at these two levels. And then you start coming off again. The thing with trading around the cash open, right now my trading room is closed. I haven't decided if I'm going to reopen it or not. But the thing with the cash, if I talk about it every day in the trading room, I don't trade during the cash open. I let it settle down after about 5 minutes, and then I trade, because I know that lots of times you get these reactions. You get a move down, then you get a move up, right? So look at where we're trading right before the cash open: 24, 23, 24, get down to 22 and a half. And then you rally back up, back up to, well, in this case is only 25. But you did get all the way up to, 6.25 up here. So, it's about a 5-point range. And then the market settles down. I mean, that's when you could be looking to trade. Okay, now watch what you got here. You got imbalance. When you make this new low, you make it a low by a tick. Divergence, this time with a ratio. You do pop up a little bit, and you come up here, you got a ratio bounds low, so it's a bearish ratio. Come in here, got another divergence. So right now you've had 1, 2, 3, and what time? 8:46 to 8:56. I'd be watching to see what's going to happen if we're going to take out this low. I'd probably be looking to sell it. 9 o'clock, a lot of stuff happened, and what do? You did make a new low, but by 2 ticks, right? What can you do? Then you come back up here, bearish ratio. And you got this bullish ratio right here, point of control right at the bottom. Again, I always say watch these bars, the green candle with the point of control at the bottom, or if it was a red candle, it'd be on the top. These are usually very potent bars. However, at this time, watch how fast this market's moving here. 9 o'clock, boom, boom, boom. And then you make a new low. So, and this comes right after a bearish ratio. So again, I'm always hesitant to take trades where you have a bearish number and then a bullish number right in the next bar. I prefer to get these when, I'd be really more interested in this if this was in a bearish ratio. That's just me. So, had you sold here off these divergences, thinking we're going to make a new low, you'd still be short, I think, because you'd be getting short around this 22 area. It trades up to, what is that? 3.5. So 1.5 against you. Again, normally I would find this to be very bullish, but it comes after a bearish signal. And I don't like to take one right after the other. And then what happens? We come back down in here a few minutes later, make a new low. So again, if you're short off in here, off these 3 divergences, you could still be short. This is the delta surge, given a sell here. Again, it's encouraging to get this big selling imbalance in here, 1700. And, we come back down, we make this new low here at 908. So, from 2 down to 30.5, and then you bounce up from it, okay? All of a sudden you're seeing some very nice imbalances. But again, this move is very fast. This is why you got to be trailing your stop, and you should have a stop in at the very minimum. You should be looking at around the 24 area, because what you don't want to be doing is getting short off of this. You're short in here and thinking, I'll give it up to 5 or something. No, you shouldn't, especially after we've come up to 3.5 a couple times. Well, once, and when you got to 3.25, 4 is pretty tight if you're trailing it. Maybe you could, as we come into the new lows, you could lower it a bit down, to 3, and then we're down through it, maybe down to break even. But again, that would be a stretch. I think I'd probably have stayed at around the 3 area, or even 4, and let it stop me out. So you did have a trade that was in your favor a little bit, but it didn't really give you much in it. You're getting short around 22 and a half, and where'd it go? It only went down to 20 and a half. before turning around. When I see big imbalances like this going against me, usually that's a sign for me to get out. And you can see it just moved very fast. Then, we went up, got up to this area, came off a bit, went sideways. We did later make a new low, but again, I'm not advocating, taking heat all the way up to, to 25 and then hoping it's going to come back down. Honestly, when it makes this move here, I'm like, that's it, man. This low is going to hold. I'm not necessarily looking for it to sort of sputter around and then come down and make new lows down in here. Definitely not at all. So, we got down to 19 3/4. Okay, so you got a divergence there. No ratio. You got this nice imbalance. I love taking imbalances off lows. In this next bar, we pull back into the imbalance before continuing back up. And, we sort of go up a little bit. We get up to 24, just go sideways, come back down, hit the low again, another divergence, close to a ratio that I would find to be bullish. I use 0.7, or I think 0.69. This is 0.74, so it's close but no cigar. I'm just, whoops. I was trying to show you my setting there, and I think I just screwed it up. There we go. So that setting, right, is this one, 0.69. So you can see here it's 0.74, so it's close. There's not much difference between 0.74 and 0.699. But anyway, it doesn't meet the qualification. But then here you got another couple of things. One, you have the divergence. Two, you have the ratio afterwards. Three, you have a 3 in a row, ratio. 4, you have a stacked imbalance. So you got a lot of bullish signs off this low, really. You have the divergence with the ratio. Then you have the 3 ratios in a row. Then you have a stacked imbalance. It's close to a delta surge here. You see the rising delta, 300, 500, 2000. Which is also nice to see, an increase in delta like that. And what do? You went from the low at 19 3/4, and that was it. I think that was pretty much the low for the day, if I remember right. And then you come up here to the highs. I like to see when you break through the highs, I like to see imbalances. You got 1, 2 there. That's nice. You get up here, you got a divergence with a ratio. You come off in the next bar a little bit by a couple ticks, and then you just come right back up. This is the delta surge. So, had you been short off of this, I'm not sure I would have gotten short off of this. I mean, we literally just made a move from our low up to our high, and then you get a divergence with a ratio. Be careful. Again, take things in context. It's not like we had just been sort of trading around the highs, for the last few hours. We literally just went from the low down here. This is at 10:08, right? 10:08 up to these highs up here, in an hour and a half, less than. So, it's not like we've just sort of been meandering around, where the low was made 4 hours ago. It literally was a straight move, but it was a move from the low right up to the high. Then you get this again. I'm always looking for signs when you take out the high, looking for signs that we're going to keep going higher. Here you got these imbalances, 780, 900, even here 300. And then there, this is nice to see. You got the delta surge, so you got delta increasing right at the high. So buyers are coming in, and you just keep making new highs. You go from the 29 area up all the way up. Up here, you got another one of these divergences with a ratio in the next one. I would have expected more out of it, but what happens, you come right back here with a bullish ratio, and look at this volume, 4,000, 2,000, even here 3,000. So you're putting in some lot of volume in here. This is potentially a support level, and you can see you come back down here, another 2,000 trade, another 3,000 trade, and you just keep going up. Another delta surge here. You take out this high, boom, boom. You got imbalance, 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 and that's all I got on my charts for the day, unfortunately. So, let me see if there's any one other chart I could show you guys just really quick. Showed you. Well, this is the U-turn. U-turn wasn't that great this morning. Basically since the cash open, that's a little early. I mean, that's before 7. Still, that was nice. You got a nice buy here, right ahead of the cash. That worked out. This one, not really. It's a 3-range chart. This one took a little bit of heat before it went up. This one started working, then failed. That one failed. And then, here late in the day, I'm just trying to think. What did March E-minis settle at? Anyway, electronically overnight right now, it's around midnight actually. I'm recording this. I'm not saying you would hold it until now, but we did close the session around up here at 37. Again, I don't know what transpired in here, after this, but I do know we settled up in here. So maybe you could have got something out of it. I don't know. I don't know. I won't know till I take a look at these charts in here. A DAX chart. I just want to take a look at if I could find it. But again, these indicators they're designed to help you read the order flow. It's once you're comfortable with order flow, you really don't need them. I don't say you don't need them, but it's a lot of this stuff becomes secondary. Obviously, if you're looking at a bar chart, you're going to need it. If you're looking at an order flows chart, you can sort of pick up some of these things by yourself. But again, it comes with experience, right? You got to have the experience of looking at the charts and know what you're looking for. Just give me one sec. I thought I had a DAX chart. I'm just trying to find it. Where are you? DAX, people always say, hey, what can I use order flow with? You could use it with anything. I'm not sure if I showed this already. This is the mini Dow 10 range chart. So this is the flip, right? And, basically there was just the one signal here, 10 o'clock. So basically it moved from the 375 area up. That's it. Tells you to buy, and that was it. People ask, how many charts do I look at? I look at markets as mini Dow, E-minis, bonds, and I do keep crude and euro currency. But then, once I have these charts up, I got different time ranges. Not a lot, but like mini Dow, I look at a 100 tick chart, 10 range, and 5 range. For euro currency, I look at 1 minute. I look at it was at 8 range, and 987 tick charts. I look on all the commodities that I watch as well. E-minis, I look at 3 range. I look at 10 range, depending on how fast the market's moving. If it's moving fast, I'll stick to a 10 range. If it's moving slow, I'll go with a shorter duration. But anyway, I'll end this recording for now. It's gone a bit longer than I expected. I can't find my DAX chart that I wanted to show you. Actually, I forgot. I remember I was looking at it earlier, but I can't remember which thing I wanted to talk about. But anyway, thanks for watching this. If you want to know more about Orderflow or watch my previous videos, definitely subscribe to my YouTube channel. I've got a webinar coming out in a couple of weeks that I'll be sending out information on. But to learn more about Orderflow, visit my website, orderflows.com. And thanks, and I hope to see you on the inside.